Stock Market Morning Prep video for Tuesday, November 11th. Markets green across the board again. Dow Jones up 39, Nasdaq up 19, S&P up 6 and 3/4, and the Russell up $6.25. Transports in the Dow continue to make all-time fresh highs. I believe even the ES eked out a gain. Technology continues to do well. But if you really look under the hood, you'll see what I'm talking about. I'm going to show this to you on a 5-minute spider chart. Since the infusion of capital from the Bank of Japan that Thursday night, and we gapped up on October 31st, we have been really literally range bound with these small little gap ups that just ekes out enough to have a gain for the day, and it's kind of stair stepping up higher. And where you have the transports making new highs, all-time highs again. And I'm going to show that to you in the chart segment. But you could see we've had nothing but chop since October 31st. So since we've started the new month, we've gone nowhere but slightly higher on these gap ups. So for trading intraday, it's very, very choppy, very slow. And you get one move, and that's pretty much it for the day. And a lot of stocks just aren't going anywhere. It's just a selective handful. But so this is a 5-minute chart that's in front of you. And this is what happened yesterday. As you can see, we opened up, and we had one big move, and that's pretty much it all day. Again, gap down a little bit. We had one big move pretty much all day, and then we had that little sell-off into the close, okay? That's on the 7th. Take a look at this. Gap down, one big move up, and then pretty much all day with a little grind into the close for short covering. Same thing, gap up, we sold off, and we chopped around all day. Now, this is not good price action that you want to see. Now, if you're a scalper, it's great, but if this is a swing trading, if you're trading for the day, this is not what you want to see, okay? Same thing. We opened lower, gap small low, we sold off, and then we kind of just we're range bound pretty much most of the day. And this is all between just before lunchtime. And then same thing here. You can see what I'm saying. And this is October 31st. That's the big gap up from the Bank of Japan intervening. And you can see we opened up and then we sold off, and then we pretty much stair step. So you can see the price action is horrendous. All right, and that's why I wanted to put this video out. I want to put this little segment out because I had a bunch of emails saying, how do you know when there's a lot of chop? Well, first of all, if you're a seasoned individual, you would know just by looking at price action. But if you just look at a 5-minute chart, it'll tell you exactly. And see what's happening, right? We gap up, and we kind of stay in that range, and then we just drift a little higher. And then once we get one more push high, which takes out the previous low, and then we're in another range. One more push higher, we take out the previous low, and then we're in another range. But look what's happening. See, every time it pushes higher, it makes new highs. See? So that's something that that isn't anything that's great. That's been, that we're making flag patterns, just moving up like this. And even though we are moving up, you could see it's always that one push higher, and then we just kind of stagnate all day long. So terrible, terrible price action. But at one point in time, and what it looks like, that we look like the market is starting to vacate the area again, but on virtually no volatility and no volume, which is not good. So what happens when you have something like this? Well, you have a market that is in dire need of some sort of a catalyst. So what happens is, if there are no willing and able sellers at the moment, the path of least resistance is higher, because most people buy stocks, right? Unless the professionals come in and short the stock. But if there's no catalyst to short, there's no reason to continue to short. And this is what you have: this continuation of this grind higher, like we had way back when. I can't even. Oh, here we go. Something like this. That we just had this slow grind higher, and that's what's happening yet again. And then you're going to have that little correction again, and that's what I'm thinking, is that I think that it's just too easy for everybody just to come in and buy this all-time high again. I think it's just way too easy. Here is the 30-minute chart of the SPY. As you can see, we are just kind of drifting higher. All right, and we need the market to contract a little bit and pull back and see what happens here. But as you can see from the 31st on the 30-minute chart, we've really gone nowhere, and then we gapped up, and then again nowhere. We just drifted higher, and then again one big push, and we've gone nowhere yesterday. So patience is definitely a virtue in this environment. So keep it nice and tight, and wait for a fantastic setup, and that's what I'm looking for. Diamonds all-time high, the Dow Jones ETF, as you can see, making some sort of a bearish rising wedge. And remember, only bearish when we break the lower trend line. My ideal levels are the pullbacks to at least to the 20. That's what I'm looking for. Continuing still 170.53. That does not mean I'm not going to trade, but if I don't see a fantastic pattern, I'm just going to wait until this little move that we've had kind of subsides, or we get at least a little bit of a pullback. I'm even looking for a 38% pullback. I'll even take that for the time being. Here's the IWMs. As you can see, we had a nice big, nice flag pattern here. I mentioned yesterday we broke out. So let's see now if we continue to move higher. Now, if we take this area out here, and let me just put that down right there. We take that area out, then I think we continue to go higher, and we will continue to grind higher here until something happens, some sort of a catalyst here. Here is the transports, as you can see, big move up for the last 12, 15 days, and as you can see, we just kind of stagnated with little blips of higher pushes, and then yet again, 2 standard deviations away. For me, too rich for my blood. I'm looking for the pullback to the 20. And you can take a look at the Qs, and same thing for the Qs. You can see here. Now the Qs have been steadily just in this range, in this horizontal channel, which is nice. It's not a problem. When you see something like this, it kind of unwinds a lot of the overbought reading. I mean, we're still in this overbought area, but if it does break out, it will have enough energy to move higher. And if that technology breaks out along with the banks and financials, well, then you're going to continue to move higher. Now, we are getting into the holiday season here. We have a couple more weeks, and then we have Thanksgiving, and then we're full blown into the Christmas season. So what disturbs me a little bit is that we don't have a pullback. Once we get that little bit of a pullback, we'll see if that if the buyers of dips will buy into. I think they will. I think a lot of the hedgies have underperformed the third quarter, and now they're looking to reprieve themselves and chase performance here. But I think that if you don't have a pullback, it could be a little iffy. It's a 50-50 shot here, but nonetheless, I do think that we do rally. But without a meaningful pullback, for me anyway, it's difficult to look to start buying and holding stocks at all-time highs here. Okay, just use a little caution, guys. Watch the levels. The 20 days really ideal for me. I'll put some fibs on once we start to know that we're kind of breaking down here, and then we'll go from there. Have a great day. We'll speak to you tomorrow. Take care.